earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cashflow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money, only here on the School of Cashflow.
Good afternoon and welcome to the School of Cashflow podcast. I'm the host, Dale Corpus. So the idea of getting back into real estate investing after the mortgage credit crisis, when all my properties were underwater, was really, really scary. So I didn't think I ever wanted to invest in real estate again. And what got me starting, thinking differently about that was really education over the span of a few years. I mean, education got me comfortable with the idea that it's okay to invest again. So it was around 2012, 2013 when I started looking online for resources to learn more about real estate investing. And I stumbled upon the website of today's guest, David Campbell. And he had really excellent content. And things started to click in my head. And I started realizing that opportunity is still out there. The sky wasn't falling, and then I needed to take advantage of it. And sitting on the sidelines wasn't cutting it. So, but I was super cautious, and I had a better understanding of what to focus on for investing. And, I had a better strategy. For example, I changed my focus on cash flow for investing, versus using, speculation instead. And before I used to start speculating about a property that would go up in value, but really the fundamentals of cash flow are even more important than that. And it really worked. I mean, it works so well that even the name of my podcast right now is called the School of Cashflow. And so before I started getting, into listening to podcasts, I was watching David's YouTube videos and reading his blog, and he helped reset my mindset back in order with all his free education to feel comfortable investing again. And for that, I'm forever thankful. So here's a little bit more about my guest, David Campbell, for today. He's the founder of Hassle-Free Cashflow Investing, and he's widely recognized as a cash flow investing expert with real estate transactional experience in excess of $1 billion. David started investing in real estate in 1999 while he was working a full-time high school band director job with a zero net worth. Within 6 years and before the age of 30, David had become financially independent millionaire through the vehicle of part-time investing. And he left public school teaching in 2005 to focus on real estate development and commercial real estate investment brokerage. His company's investing and advisory experience has included single-family homes, apartments, retail, office, medical, condo conversion, net lease properties, syndications, land development, production, home building, private lending, and winery. And David has been a featured guest on some of America's top radio shows and investing podcasts. And his blog, HassleFreeCashflowInvesting.com, has been repeatedly named one of the top 100 real estate blogs in America. Wow, David, you've done a lot. So without further ado, welcome to the show, David. How are you?
Hey, Dale, I'm so excited to be on your show and to connect with you after almost a decade of hanging out together.
Yeah. No, absolutely. And I'm so glad, I'm honored to have you on. Again, it's like if you were the one that you personally really helped jumpstart my career in real estate investing. I had so much fear, but it's just, I think you were so genuine online. It's just like, there are so many people online, but I felt like they were selling me something, but you weren't, just FYI. And so like everything you put out there, all your material was so excellent. It made me feel comfortable and really changed my mindset. And you are an amazing educator. So for my audience that doesn't know you yet, where are you based out of geographically?
I grew up near Los Angeles, and then I moved to the Bay Area, San Francisco area. And then now I live in Oregon on a cattle ranch and just raise grass and fruit and some dairy cows. And just having a really awesome intersection of the ability to connect with nature and seasons, as well as, taking advantage of be able to work remotely and collect passive income from cash flow and do the things that I really, am passionate about.
When I first met you, that's when you were living in the Bay Area. I remember going to your office over in Vallejo, California. And heck, we were playing Robert Kiyosaki's Cashflow board game, which I really appreciated. But like, I don't even remember when that was, but what made you want to move out of the Bay Area out of state, out of curiosity? I don't think I ever asked you that.
Yeah, I think definitely the cost of living lift was a really big shift. Once I realized that my income was very solidly non-locally driven, that I could pull income from anywhere, then I looked where do I want to go with this portable income, and being in nature and with trees and clean air, being able to grow some of my own food, be able to go for miles and miles of walks out my front door. That kind of drove me to Oregon, and I can get a palace in Oregon for the cost of a tiny house in San Francisco.
No, absolutely. So, wanted to just kind of go back to your bio. So you were a band teacher, and now you transaction over $1 billion of real estate. I think that's pretty mind-boggling, especially for many folks that are listening to the show that might not even invest in real estate. I wanted to dissect that. Like, how did that all happen?
Yeah. It's how do you eat an elephant? It's like one bite at a time. So I've been doing real estate now for almost 23 years. And if you just simple math, like 50 million a year times 20 years is $1 billion. Mm-hmm. And you break down 50 million a year, it's a little more than $1 million a week. Right. It's about $1 million a week. And so in that way, like $1 billion seems just astronomically large. And then when I put my mind to like, can I do $1 million of deals this week? Like the answer is always, I can. Yeah. Particularly, if you're doing a deal that's $4 or $5 million, well, that's all I need for the month, to hit that kind of a number. So, it really wasn't my goal to do a certain transaction volume. It was really, I wanted to have freedom of location. Okay. I wanted to be able to like live wherever I wanted to live. And I wanted to have freedom of scheduling. I want to work when I want to work, the hours that I want to work. Mm-hmm. And those two freedoms, I think, are far more valuable than the third freedom that people a lot of times focus on, which is the freedom of money. Because I do have freedom of money. Like I have more passive income than I spend, and I still work. I still like getting in and doing the real estate transactions. I like helping people. I think about what it is that I do. And when I realized that I'm financially independent from cash flow, I'm not really working for the money anymore. Like I'm really can show up with the heart of like, I'm helping these people get the things that they want. Right. And so like, what am I doing? I'm helping investors that need passive income. I'm helping them create passive income for their family and their needs. On the other side of the transaction, I'm helping families, usually immigrant families or people that are self-employed and don't have good banking. They're not very traditionally bankable. I'm helping those people get affordable housing that they can own and take part of the American dream and just feel connected to our country and our culture. So those things I'm really passionate about. And then the money, it certainly is nice, having the money fuels a lot of dreams that are kind of whimsical. Like it's an interesting mind experience to wake up every day and to say like, I don't have to work for money, but I'm not old. what do I do with this resource of time? And also the power that comes from having an abundance of financial resources. It's a big responsibility, like to use that responsibility in a socially responsible way, to use my time and the resource of my gifts in a socially responsible way. So it's a really beautiful chapter, and also a privilege to be in this spot where I don't have to just trade my time for money so that I can eat, right? That cycle of time, money, food, next day, right? To break that cycle allows for a lot of higher, consciousness thoughts to come up. Like I can practice yoga every day. I can exercise every day. I can be like very mindful about my food and my schedule and, the environment or the peer group that I choose to affiliate with. Like all these are very like powerful energies that come from the freedom that cash flow provides. And early on in my investing, I didn't know that these freedoms were waiting for me. And so it was really about the money. Like, how do I make $5 more so that I can work 10 minutes less, and then as the cash flow comes, it's really one of the most powerful forces in modern society. I mean, the most powerful forces are in nature and in spirit and things like this, but in actual like interaction with other humans, that passive income, it just buys your freedom to be able to live deliberately or to live with intentionality. Like, what is it that you want to do with this precious life, this precious moment? So I'm like excited for your listeners and guests who are really on a path of intentionality of like, how do they break the cycle of time for money rat race wheel, right? And then to really show up in a way that they want to show up.
I mean, a lot of my listeners obviously are work in tech, Silicon Valley, that hustle, that grind and whatnot. And there's potentially, some of them are looking for that way out. I mean, you found real estate. I don't know if real estate found you or you found real estate. Can you even go back to when you were a teacher? How did you even know that real estate was the vehicle? I mean, did you read a book or did somebody talk to you? I never asked you that. So I don't even know.
Yeah. So I had a really strong work ethic from as far as I can remember. Like just my earliest childhood memories are like, how do I start a business as a kid, even being like, 8 years old. I remember going to the door to door collecting cans from the neighbors to trade it in for money so that I could buy video games. And then when I could afford to, I had the ability to mow lawns, I would go door to door mowing lawns. And I figured out that if I knocked on the door and asked them if they wanted their lawn mowed, they would say no. But if I mowed the lawn first and then asked for payment later, they would almost always pay me. So I would just go down the street mowing lawns and then just hoping I would collect. And so I had that entrepreneurial spirit pretty early. I remember doing a school fundraiser selling cookies. And I was after the fundraiser was over, I was with my mom at the store and I saw that like the same cookies I was selling for 50 cents a bag, they were at the grocery store for like 25 cents a bag. Yeah. And I told my mom, like, can you buy me a bunch of these cookies so that I can go door to door and sell them? And she did. And then I went door to door just selling cookies. And I think people assumed it was a school fundraiser, but I was just doing it to make money so that I could, have my own pocket money kind of a thing. So anyway, I had that entrepreneurial drive real young. I got a job when I was 18. I got a job working in an income tax office. Mm-hmm. And what I kind of didn't know this until like I grew up a little bit, but the lady's tax office was kind of in the ghetto, and she wanted to hire someone that was could just sit with her in the office. So, and then walk her to her car at the end of the night. Like, this is fundamentally what she wanted. And so she picked me because I would work cheap and I could walk her to her car in the ghetto at night. And, but while I was there, she gave me a bunch of tasks to do related to, the income tax business that she was running. And, I had no business doing income taxes as an 18-year-old, but she taught me how to do it. And there I was doing this. And I remember my middle school teacher came in to get their taxes done. And I did the entire tax return for my middle school teacher, and I'm 18 years old. And then this, the enrolled agent at the end, she like reviewed it and stamped her name on it, but like didn't change a thing on this tax return. And it's all software, Right. Anyway. So, and I realized that this middle school teacher paid a lot of money in taxes. And I was like, oh, wow, okay, I'm going to be a teacher someday. I better get ready to pay a lot of taxes. And then this next week, a guy came in and he owned a bunch of shopping centers and grocery store properties. And it took me like 2 weeks to do all the data entry on this guy's tax return. And I didn't do the tax return. I just did the data entry. And then my job at the end, after the enrolled agent did all of the calculations and the return, et cetera, was to just hit print and staple it and give it to the guy and say, this is how much of a check to write to the IRS. And this tax return was so thick. And I was like, okay, I was expecting this tax bill to be really big, right? Because I knew how much money he made. I did all these data entry. And then I said, like, your tax bill is $0. And I was like, no way. No way. So I asked my boss, I was like, how is it that my middle school teacher is paying like 1/3 of her income in taxes? And this guy who I know is loaded, it paid nothing. And she's like, well, it's called depreciation. And you're not quite old enough to get this yet. You're only 18. So how about the best advice I can give you is as soon as you get your first professional job, she's like, go buy a 2-bedroom anything, go buy it, rent one of the bedrooms out, live in the other bedrooms, and you'll just thank me later. I was like, okay, cool. So I did. I got my first job teaching high school band. I moved in with my parents for about 5 or 6 months and saved up enough money for like a 3.5% down FHA down payment, right? And so I got my down payment together. I bought this condo in Orange County, and I lived in one bedroom and I rented out the other bedroom, and that guy's rent was more than half my mortgage payment. And then I got the depreciation on this condo. And after 2 years, that condo had appreciated more than my gross salary as a band teacher. And so I went from having really like no net worth to having this like a subsidized housing cost by my tenant. And then I had a net worth. Like my checking account from teaching band was zero after 2 years. Like I just spent everything I made. And then this condo, it went up like $60,000. And that $60,000 of equity was like, heck yeah, let me sell this condo, use the 60 grand to buy like a 5-bedroom house. Mm-hmm. And so then I bought a 5-bedroom house and I rented out 4 of the bedrooms and I lived in one, and my 4 roommates paid the entire mortgage. So now I didn't have any housing payment at all. And then that house, because the market was just doing big things back then, it went up about 100 grand. And I was able to go to my bank, and because I had no housing payment because of my roommates, and I had all this equity in this home that I bought, I was able to do a cash out refinance and then go buy another rental, and then another rental, and then another rental like that. And after about 10 real estate transactions over a span of about 6 years. I had enough net worth and passive income to get to quit my job teaching high school. And then I stopped teaching high school, and then thought I was just going to be retired, and then realized real quick that I can't just sit around playing video games and like all for the rest of my life. I needed to find something to be passionate about. Right. So that way, let me go get into real estate development, which is a big leap, right? From being a high school band director. But I bought a 30-unit apartment building in Vallejo, and I bought it with hard money and my entire life savings, and converted it to condominiums. And I sold each condominium. And I only had enough money to fix up one condominium. So, and I did it with credit cards. Like I charged all the materials at Home Depot on my credit card, fixed up one unit, and then I'd have to sell that unit and get the money to go fix up the next unit like this. And I just took 2 years to rehab and resell the 30 units. And that gave me the experience and the confidence to start a home building company in Dallas, Texas. And so I started building houses in Dallas, and that's about the chapter that you and I met.
Right.
After I had started building houses in Texas. And I was a speaker at a real estate club, and I met Ken Gain, a private mortgage lender broker from Alaska. And he blew my mind that he was just living life, just going all over the world, adventuring. And I was telling him how much hassle it was being a landlord. And he's like, oh no, like mortgage notes, that's where it's at. Like, it's so simple to own mortgage notes and collect the cash flow from mortgage notes. So I kind of made that goal. Like, I wanted to get into mortgage note investing, but I didn't have enough cash to do it. Like, I kind of thought it was a very cash intensive business to be in. So I kind of hung out in real estate development for a while. Realized at the time in 2010, banks didn't want to finance speculative home building. And so I started borrowing hard money to build houses with, and pretty quickly figured out that there were a lot of people that I knew that wanted to be hard money lenders, but they didn't have the opportunities. So after I had borrowed all the money that I wanted to borrow as a hard money lender, as a home builder, I started arranging for other home builders to borrow money from my relationships, and then just making fee income that way. And then it just kind of grew to the place where I was making as much money brokering hard money loans to home builders as I was being a home builder. And then just after building about 350 houses, decided I didn't want to do that anymore because of it's just incredible the amount of logistics that are involved in running that. Like, and you're just always on. So it's a great business, but it is not an investment. It's a very active business. So I wanted to get into paper. So I sold off my home building company, and then went into paper full time in 2015. And there's a bunch of other brokerage stories on there. I brokered apartments and did a lot of consulting for some international developers and things like this. So paper is just fantastic. The ability to help someone else realize their real estate dream and recognize that they have all of the logistics and the hassle of ownership. And I get to rent my money. Basically what I'm doing is I rent my money, and then someone else uses their rented money and pays pays me interest. That's the rent on money. And then that gives me the freedom of time to just be in that space of renting my money and letting other people manage the day-to-day situation like that.
Okay. So is mainly all of your, real estate investing primarily focused now in mortgage notes? Because I know, and again, I met you through when you had, that your development company, because I bought a turnkey rental from you, which did great, by the way. So it's like, is all the focus on notes right now?
It is for me. And I don't think that's a one size fits all formula for anybody. It's kind of like what fits me, my chapter of life and my level of experience. So I'm doing about $40 million a year of private lending and making the fee income off of the origination of that. And then also it creates opportunities for me to have passive income for my own portfolio. And it's pretty powerful, the velocity, like to do $40 million a year of paper. I can do that with, just a couple $1 million of cash, right? So a couple $1 million of cash turned over, every 2 to 3 weeks creates that velocity. It creates that volume, that transaction volume. So I really love paper now. I would love to be all in paper, but I can't, or I choose not to because of taxation and inflation. There's just some incredible advantages to owning investment real estate, the depreciation on the investment real estate, as well as mortgage paper is not an inflation-friendly asset. Inflation, the mortgages that I own, or their investments, it's an asset to me, it's a liability to the borrower. And when these assets are dollar denominated, they're denominated in a specific currency. And when that currency devalues, the borrower is able to pay off their debt with cheaper money. And that is a loss for me because I loan out money that has a certain intrinsic value. And when I get that money back, that intrinsic value has declined, right? And so inflation and the inflationary cycle that we're in right now is, in one hand, it's good for lenders. On the other hand, it's bad for lenders. It's good for lenders because when there is inflation, it bolsters the underlying property value. And when that property value is strong, you're more likely to be repaid on your loan. And so your loan losses are, in our case, non-existent. Just the market's been upward trending for so long that it's if you're underwriting loans well at in our case, 75% loan to value, it's almost impossible to lose money in an inflationary cycle where property values are upward trending. And you can lose money in any investment for sure, but in lending, the borrower's down payment is the biggest protector of loss, and inflation also is in one hand, it's helping to ensure greater payment performance because of inflation. Yep. On the other side, when you get repaid, if you've got a note rate of, in our case, we put money out about 9 to 10% interest rate. If inflation is, say, 5% and we're lending at 9%, then we're not really making 9%. We're making the delta, which is 4%, positive return on our money, and it's still positive, right? So in that way, it's exciting.
That makes sense. And I know that sounds like correct me if I'm wrong, but it sounds like a good amount of your active income then is just from the fees you're collecting from brokering mortgage notes, right? And but I take it that when you invest in your mortgage notes, are you still mainly investing in your self-directed IRAs, or tell me more about that? Because you're the person that got me the mortgage notes, and I love them, by the way.
Oh, awesome.
And so how do you typically invest when you're investing in mortgage notes yourself? Is it, outside your IRA, or is it inside your IRA, or let's talk about that.
Yeah. So I like to talk about tax efficient investments and tax inefficient investments, and tax efficient buckets and tax inefficient buckets. And so a tax efficient asset would be real estate, right? Because of the depreciation on it, the deferral, when it depreciates in value, you don't pay tax on it in the current year. It's deferred until sale. You can do a 1031 exchange when you sell. When you die, you can get a step up, and your heirs get a step up in basis. And in that way, you can really hold investment property potentially tax-free for life. Right. And so real estate is an incredibly tax efficient asset. Mortgage notes are tax inefficient. The interest income is taxed at the ordinary income tax rate. And if you are a high income earner, your tax bracket is really high. And so in this way, for me as a high income earner, my marginal tax rate is really high. And therefore I pay a lot of taxes on the interest income. And tying that back to our last conversation about inflation, let's say I'm making a 10% yield, and then I got to pay tax at a 40% tax bracket. So then I earn $10 of income, I spend $4 in taxes, I get to keep $6. But if inflation is happening at a 6% rate, I'm actually at a wash. So in this way, even though I'm making a 10% yield on a mortgage note investment, after I pay taxes and inflation, it's just treading water, kind of like this. And so one is I need to have, as part of my mortgage investing strategy, I need to have tax strategies, because I don't want to just tread water. I can't control inflation, but I can control the tax strategy. So one strategy that's hugely helpful is using self-directed retirement account, a self-directed IRA. And so in this way, I want to have, I've made the choice that 100% of my self-directed retirement account is invested in mortgage notes, because the income from that mortgage investment goes to my IRA. And then the IRA, in the case of 401k, traditional 401k, it's tax deferred until I take the money out, so I can get compound interest on that money. And then in the case of Roth IRA, that interest is tax free for life. And so really using the tax efficient bucket of an IRA, a self-directed IRA, with the tax inefficient asset like mortgage notes, and putting those two together, it works really, really well. And then outside of my IRA is where I kind of feel forced to buy property. I really, I love real estate more than any other non-mortgage investment. My favorite investment is mortgage notes. Number two would be real estate, but real estate comes with tenants and toilets and hassle and transaction costs and et cetera. But I feel compelled to own real estate because it functions as such a powerful hedge against inflation and a giant tax shelter that is really valuable to me because my tax bracket is high.
Right. So, outside of investing in notes in your self-directed IRA, what kinds of asset classes, or what are you investing in right now actively, for that tax shelter you're talking about, et cetera, outside your IRA? Are you doing syndications, or are you doing something else?
Good question. So I have been a syndicator where I've been the general partner, and I've also been a limited partner, just writing checks. I don't really like syndication as a tax I don't usually find that syndications give people the tax advantages that they think they do, even when they are invested in real estate. And it's primarily because when the syndication wraps up, there's not usually a capacity to 1031 exchange. So then you're just getting, capital gains out the backside. But if you were directly invested in that same real estate, you could 1031 exchange forward. And so things that I really like, I teach a concept that the cap rate on the property must exceed the interest rate, ideally by a minimum of 1.5%. And so just to no investor left behind, the property's annual net operating income, so all the rent less the expenses on the annual basis, that's the net operating income divided by the property value. Some people use the purchase price, but I like using the property value, is the cap rate, and it's expressed as a percentage. And so if the cap rate right now, I'm seeing cap rates are really low. They're compressed. So maybe if you could buy a single family home with a 5 cap rate, I would need to get an interest rate of 3.5% or lower to make that work. And we are able to do that right now. A 5 cap rate isn't a particularly attractive cap rate for an investor, but being able to make that positive arbitrage spread where long-term fixed interest rates are low right now, getting that spread between the bank's money and the cap rate on the property, it still makes sense to buy in that way. And so I do own some single-family rental houses. Those are particularly good because the financing is cheap and fixed for long term. Also, the depreciation on residential, on a single family rental is more favorable than commercial. You get a 27.5 year straight line depreciation on the improvements for single family, and it's 39 years for a commercial property. So I also own medical office and single tenant net leased retail, like dollar store kind of a situation. So those asset classes give me the hedges against inflation that I want, primarily the debt. The actual real property itself is an okay hedge against inflation, but the real hedge against inflation is the playing both sides of the dollar denominated debt game. And what I mean by that is I can be a lender of dollar denominated debt, and that's my asset and someone else's liability. And at the same time, I want to be a borrower of dollar denominated debt, which is my liability. And so by marrying the liability of dollar denominated debt with the asset of dollar denominated debt, that gives me a pure hedge against inflation. And so in this way, it's not enough for me to own real estate as an investment. I need to own real estate with a lot of debt on it, because that in a period of inflation, which I think we're in, my assets of mortgage notes are going to be diluted, but my liabilities that are dollar denominated are also going to be diluted. And so it's a pure hedge for me. And so in this way, if we have inflation, I'm okay. And if we have deflation, in a way, I'm also okay, because the mortgage assets become more potent. The dollar denominated mortgage assets that I own, they purchase more goods and services in a deflationary economy. And so it's really important to me to be lucrative in an inflationary environment and lucrative in a deflationary environment. And this is why I think real estate and mortgage lending going hand in hand are a beautiful situation, particularly, and I'm being redundant, but it's the real estate ownership with debt. And I see a lot of people steer away from debt when they're real estate investors. It's like a badge of courage where they're like, I'm paying off my rental property as fast as I can. I'm making extra principal payments. I'm paid cash for property. None of that. That's all ego driven psychobabble that makes you feel good that you're getting ahead in the financial game, but it's just not true. Like that debt is an integral part, the real estate debt, good debt. There is bad debt for sure, but that positive arbitrage debt where your cap rate exceeds your interest rate. If you could borrow money at 3 and invest it at 5, how much would you want to borrow? Like all of it, right? Yeah.
Right.
If you could borrow at 3 and invest it at 2, how much do you want to borrow? None. Right. You don't want to borrow at a higher yield than you can invest it at. So anyway, that positive arbitrage is an essential, in my opinion, an essential part of real estate investing, to the place where that's all it is. Like when people are like, let's talk about the fundamentals of the real estate and what's the real estate doing, and is it got green paint or blue paint or how many bedrooms? I'm like, stop, none of that. Like it doesn't matter. Yeah. What's the cap rate? What's the interest rate? How high of an LTV can I get on this positive arbitrage situation? And like, that's number one for me. And number two is just simplicity of management. How simple is this arbitrage formula to manage? And so I like economy of scale, like a larger, everybody should have their own minimum economy of scale. Some people focus on doors, like, oh, I got this many doors. I'm like, in theory, if I could have one door, that would be perfect. Like, how simple would that be?
Simple is better. Yeah.
Yeah. And so I need to have a minimum deal size that makes sense to me. And that tends to skew towards commercial because of the minimum deal size. But when you're starting out, your minimum deal size is going to be small, right? But as one's portfolio grows, as your sophistication grows, your deal size should get bigger, right? In this way where maybe like it's just kind of arbitrary, but just as a point of teaching like this, like what if you were only allowed 20 assets of any size, right? You're only allowed 20 piece moving parts in your real estate portfolio, because any more than that, you just become a slave to the logistics in your portfolio. Right. And so as your net worth grows, as your experience grows, your deal size also grows. Like it's baked into the game of Monopoly. It's so brilliant. After you get the 4 green houses, you don't add on a hotel. You throw the 4 green houses back in the box and you replace them with a red hotel. And I think that's whoever built the game, I'm imagining that they knew that lesson.
Yeah, that makes sense. I'm just amazed of how I think you're a master just jumping into things and figuring things out. And I know a lot of folks that are listening, it's just like they think they need to know everything about everything just to pull the trigger on something. And like when you started, it was before the time podcasts were a thing where people are learning a lot now about real estate investing. I'm curious, how did you learn along the way? I mean, you did so many different things in real estate, but like, how did you have the confidence to pull a trigger on something? I mean, again, podcasts were around, but who did you surround yourself with, or what did you read?
Yeah. So two parallel questions, confidence as well as education path. So education path, it was late night infomercials on TV. Like you could buy property with no money down, buy these cassette tapes. So that's how you literally cassette tapes through late night TV is how I got started. And then I met some people that were doing stuff that it was a little blurry. Like I didn't know it was blurry, like the stuff that they were doing with like no money down financing.
Right.
Like, there was I didn't know enough to know at the time that it was like the stuff that they were teaching was a little fuzzy.
Yeah.
But you just pick whatever mentors that come your way. And then you just refine your strategy and say, wait, maybe I need a more elevated mentor here. Maybe I'm my own mentor here. It's the school of doing. In a way, I think podcasts and YouTube are a great service for expanding knowledge. But truly, like, listeners, just check your heart on this. Like, the only true learning comes from personal experience of doing, right? Mm-hmm. It's like, we can talk about doing the high jump all we want, and you could listen to every podcast in the world about doing the high jump, but you're not really learning until you get out there and start running and you try to jump over that bar, right? So you do need both, right? So, like, podcasts are awesome. I didn't have the benefit of podcasts. Candidly, I don't listen to that many podcasts now, but it's because I'm doing calls with investors in the field, like, for hours every day. You know, it's like I'm practicing my craft with fresh minds that are some of the best in the industry, like, on a daily basis. Like, every day, all day long is calls with Dale. You know what I'm saying?
I love it. Yeah, I love it. It's like, yeah, it's like you're living the dream, and you still have time for yoga. Yeah. You know, and so I'm just curious about your team. I don't know how big your company is or how simple it is, but, like, who's on your, in your real estate company, your real estate team right now? Like, what do you have in total, and what kind of roles do they play? I'm very curious.
Yeah. Great question. And I don't want to skip over the prior question, which was like, how do you get the confidence to do it? Yeah. When you start out, you have nothing to lose. Like, as soon as you feel like you have something to lose, you're going to lose it. It's like this attitude of fearlessness, which is different than carelessness, right? Like, to approach an attitude with fear, or to enter into any situation with fear, it's just not going to go, right? And so, in this way where people hold themselves back because of a fear, it's a fear of loss. And in reality, like, we're just so perfectly held by the universe, you couldn't possibly lose anything. Like, the world is just so abundant. The energy is just so thriving that there is nothing to lose. Like, you manifest through your mind that abundance, which you think that you deserve, right? And so a lot of people get in this paralysis of analysis where they keep digesting information. They think, if I just learn enough, then the fear will go away. And when the fear goes away, then I will act. And that's just not true.
Yeah, I agree with you. I mean, we're limited by what we believe. And it's just like, I've been interviewing folks left and right, my podcast, and even outside my podcast. And I just love everybody has such a strong, mindset, and the world is so abundant. And I feel the same way. And so I love that we're talking about this. So, just going back in terms of doing your own business, I'm just so curious, like, what's your team look like right now?
Yeah. So simplicity is powerful. Collaboration is powerful. And so in this way, I have tried to build teams that were employee based, or like, in a way, like a patriarchy kind of a way, where, like, I'm the boss and you work for me on an hourly basis, and then you do what I say. And then the world does work that way. And also, it didn't work for me. And so for me, I really like creating collaboration where I'm not responsible for anyone's direct supervision in this way, but that everybody is coming together in a way that we all get the thing that we lack. Like, we offer the thing that we have in abundance, and we receive from the collaboration the thing that we're lacking. So right now, my team is my business partner, Tamsin, and I, and that's it. Like it's a 2-person team, and we're doing 40 million a year of loans. And it is mind-boggling in a way. And on the other way, it's collaboration. So what I like to do is I use the same title company over and over and over and over and over again. And they know my systems. And when I call, they're like, wow, we know you. We know exactly how you want your file to be. And I learn from them. Like when they scan their documents in, they scan them in the same order every time. And then I just learned from their system. I didn't have to make them do it my way. I just learned the way that they did it. And after I understand how they did it, it is an efficiency for me by adopting their best practice. We work with a loan servicing company, August REI. They're fantastic to work with. And I learned their systems, right? I don't have to be every vertically integrated part of the business. I just want to know what is my value proposition and how do I do that the most efficient way possible. And my value proposition is creating a marketplace for buyers and sellers of paper. So there's people that create paper and there's people that consume paper as an investor. And I'm just the grocery store for that transaction to take place. And by being in that grocery store, I got to stock my shelves. I got to go buy the paper, and I buy it from kind of 3 different categories. One is home builders who are building stuff. They're a great reproducible source of inventory. I can work with one builder, and every time they build a home, they borrow money from me. And in that way, one relationship could be worth, $2 to $5 million of loans per year, just off of one primary point of contact, right? And then the other is rehabbers. And so I picked a couple markets that I wanted to work in Texas specifically. And I identified rehabbers that I wanted to work with. And each of these rehabbers, I've got like 5 rehabbers that send me a bunch of deals. And if each rehabber is doing, 2 deals a month, and I've got 5 rehabbers, that's 10 deals a month or 120 deals a year, just off of 5 points of contact, right? Wow. And so that allows us to be really efficient. So when I work with that rehabber, I'm like, here's our model, here's what we do. And anyway, so it's just really efficient in that way, and outsourcing and working with different companies.
No, I didn't realize you kept it that simple. Like I'm amazed right now. So good job. I have some final questions for you. It's like, what are you excited for in your business right now?
Yeah, I'm really excited to really understand like what it is that I'm doing once I've removed the distraction of money. Because when I come to work and I really meditate on like, am I doing this for the money? The answer is no. Like I don't need the money. Like if I made more money, I couldn't spend it. Like I spend as much as I want to spend, I spend just from passive income. And so when I sit down at my computer, I get to say like, what am I doing here now? Who am I helping? How do I serve them in the individuals and the universe in the best way possible? And so I sometimes will see a nonprofit, and like the nonprofit's like, hey, come hang up posters or drive a vehicle or come wash our thing. And I'm like, well, I could do that, or I could sit at my desk for an hour and make an insane amount of money and then just write a check, right? And so in this way, I can serve nonprofits greater by doing the unique, highly efficient business model that I've curated, right? When I sit down to a transaction, it's really like a meditation on like open-heartedness, where a lot of times in the past, I've looked at a non-paying borrower and I've been really frustrated, like, oh, this borrower, they're not paying me and they're not answering the phone. And what's the wrong with the world where people aren't doing what they say they're going to do, right? Like, whew. none of that, right? So I open up my delinquency report and like, who's not paying today? And I just sit, I don't know these people. I've never talked to these people. I've never seen their home. I've never had a conversation with them. It is very much multiple degrees of separation between myself as an investor and the person in the home. But they are divine beings. Like, they are like humans with lives and stories. They aren't a commodity to me. And so I can just sit with this person in prayer and just like, they must be having a hard day.
Mm-hmm.
You know,
Yep.
like, I know what it's like. Like, I remember when I couldn't pay all my bills, you know, and this person's there right now. So just to like hold them with empathy. And also they got to pay. Like, it is not like, it isn't a kindness to say like, you can't stay in this home. You can't stay in this home that you can't afford. It is not a kindness to anyone. Like, I can show up in empathy and hold like positive vibration for them, and also invite them to leave the home they can't afford. Right. These can coexist. But in this way, I'm excited because it's a meditative practice for me. It's like, what do I bring to this intersection with the economy? What do I bring to this intersection with the people I do business with, when I remove money as the motivation?
Mm-hmm.
And so in this way, it can be like, every interaction can be like a spiritual practice of just giving and receiving energy. And that's really what money is. It's a symbol, it's a token placeholder for the giving and receiving of
I love it.
Energy. And so when I find myself getting frustrated about the money, I know I've blocked the flow of energy. And so then it's up to me. It's, if someone isn't paying me, it's probably because somewhere energetically I've blocked that giving and receiving. And so it's up to me to just open that giving and receiving again. And maybe the thing that I give to this family that's not paying is an opportunity to start again in a new home. You know, it isn't like giving and receiving, and empathy doesn't mean rolling over and enabling someone not to follow through on their legal contracts, right? That's not true giving and receiving. But I remember, evicting a tenant and giving him a shopping cart of food on the way out. It's like, sorry, man, like, today's your day. You're going, the sheriff is here. Also, here's a gift bag for you, peace and love and blessings. And also get the heck out. It's both. Right. And I think that's what I'm most excited about now, is like doing all of the daily activities that I've done for 22 years in real estate, but doing it in a new way where it looks like the same thing as I've always done, which is real estate transaction, but it isn't a real estate transaction anymore. It's like a yogic practice of like giving and receiving energy with everybody that I'm doing commerce with. And maybe this person who gets evicted is like, wow, I've never been evicted so kindly in my life. Now, like, they take that as a positive experience, maybe, I don't know.
Yeah. It's like, you have a Zen approach to real estate investing, and I'm digging it. I like to ask this question is to all my guests. I mean, you can answer it however you want. It's like, what does success mean to you now?
Oh, that is such a good question. I think I can answer that in a bunch of different octaves, and it's the same answer, but just in different octaves. So at one octave, success to me means agency, where every single day I can live in intention, that I wake up and I'm doing exactly the thing that I want to do because I've made the deliberate choice to do that. And so that feels success to me. Like, when I was working in a job for someone else, I really didn't feel that agency at the micro level. Like when I was teaching, I taught the class that the school told me to teach. And I got to use the toilet when the school told me I could use the toilet. I taught the students that the school told me I needed to teach, right? There was not a lot of agency in that. Now I go to bed when I'm tired. I wake up when I'm done sleeping. I work as many hours as I want to work, and I help as many people as I want to help. And that freedom of agency feels like success to me. Right.
Yep.
The other part of success to me is it's the energetic flow that comes from just wholeheartedness and integrity. Integrity more than just like, I'm doing this thing because if I don't, I'm going to get in trouble. Like that's not full integrity, right? That's like, I'm doing the right thing because that's the law. Like, okay, maybe that's one level of integrity, but the next level of integrity is like really considering, like, is this a complete energetic action? Like when I'm participating in giving and receiving with this borrower and this investor, is this really moving the universe in a higher vibration or not, right? Because wealth that, more than just wealth, but it's like the ability to move large amounts of money, like the concentration of money energy that I have is kind of unprecedented in the history of humanity. I mean, I'm not a billionaire by no means, you know what I mean? But like when I look at how much money, like $40 million of business on a year basis, like there's countries that have a GDP right around $40 million, right? It's like or at least cities, right? You pick a like $40 million is greater than the annual budget of the city that I live in, right? This is a lot of energy that I have the ability to make decisions over. And am I making those decisions responsibly? Even participating in the act of lending, I do a meditation on like, is this even industry? Is this like an ethical participation, right? And at some level, I can find that it's not, right? Like this is land that was stolen by one government from another government. And did any government have the right to like impose restriction on this use of land? And then I'm like financing the buying and selling of stolen property from like native peoples. I'm like, this is all BS. Like, I don't want to participate in that. But then I also look at like, well, this is where we are now, like, where are we now? And so, looking at a lot of my business is focused on creating affordable housing. It's working on financing of first generation immigrants to America who are, it's kind of like, there's so much discrimination in America right now, particularly like racial discrimination, the ability to, immigrant families go to the bank and they say, hey, I am, I'm from a Central American country. I'd like to get a loan to buy a home here in America. And the bank says, we're happy to finance anyone of any ethnicity as long as you're American. But if you're not American, there's no lending for you here. Like, welcome to America, but also you're not really an American, so don't think you can buy property here. Like that kind of bullshittery is like, if I can participate in a private banking system that creates home ownership opportunities for immigrants, and that banking system doesn't exist otherwise, like that feels really good. That's like, maybe I can't control the whole like system. Like I got to do my part. That
you're doing what you can. And I love that. Yeah.
Yeah.
Um,
And, maybe we could live in kumbaya and like, let's just throw out money and not have money and all love. And like, well, that's just not happening right now. But what is happening now, right? What can I do that is my tiny piece that helps other people, that also allows me to sustain the integrity and the freedom that I want.
yeah. You're really coming from a place of contribution, and it shows. Last two questions. Any final words from my audience, and how can someone get a hold of you?
Sure. So you can get a hold of me through my website, hasslefreecashflowinvesting.com. Also my email, david@hasslefreecashflowinvesting.com. I've got some free ebooks, a bunch of free websites and podcasts, including this podcast that I'll be posting on my site. It's all the education on my site is free. I don't sell any education. I just do transactions with people, like real estate investor type transactions. So that's a good way to get a hold of me. And then just final thoughts is for people who are working on creating passive income, I would just start by checking in on what is it that this passive income will bring you that you don't already have. And I think a lot of people, if they really do a self-values assessment of like what's important to them, what is it that they need, and if they're approaching passive income from a pure mindset of helping other people, from how do I create value for others? How do I create service to the world? How do I use my creativity to manifest something that didn't previously exist in the universe? Like, those are beautiful things, that the giving and receiving of the energy. Like, if you give the energy and then you open your heart to receiving the energy back, that's the passive income, and it's not only the giving of the service to the people in the universe, but then it's truly like sitting open-heartedly and really letting the universe give to you, and I think a lot of people, they focus on the giving without allowing the receiving end to happen. Or they're giving with a motivation of, I call it purchasing, which is like, I am going to do something for you on the express condition that you do something for me, right? And this is kind of baked into the real estate transaction situation. And so at a certain octave that must exist, right? But also when you're just approaching the energy of passive investing, it's the like, I am giving and I am also open to and removing any obstacles to receiving, right? And then in that way, like the deals just come. Like, I don't know. It's like you just open your mind and your heart to receiving, and the phone rings and it's like, hey, there's this deal you got to do. And it's like, well, it takes $52 to do it. And I look in my pocket and I've got $53. I'm like, yes, I'm in.
It was meant to be. Yeah. I love it.
And in fear, like, really just keep opening yourself to love, and like seeing where the fear is blocking you from receiving. Because if you don't have all the passive income that you want, it's probably because you're pushing it away, and you're probably pushing it away in fear, right? Which is different than saying, just sit on your butt and watch TV and eat bonbons and the money will show up. That's not what I'm saying at all, right? Just put yourself in the flow of commerce. Okay. Be open to commerce, educate yourself in commerce, open your heart, and just give and receive. And sometimes you wind up giving, and there's no way that specific person or circumstances, there's no way that it could repay you, and that's okay. It's okay, and sometimes money is just going to show up and you're like, I didn't really, it's the compensation on this deal was not commensurate with my work. Like, I just got paid way too much for the amount of work that I did. And that's also okay.
Me too. Yep.
Yep.
Well, very wise advice, wise words. Thank you for all your advice. And that's all the time we have for today, folks. And thank you, David, for joining me on this episode. It's been a pleasure to catch up with you. It's been a while, and you're inspiring, you're genuine, and you touched a lot of lives, including my own, with all your education that you provide. And so I appreciate you and all that you do. And to my listeners, thank you for checking out this episode of the School of Cashflow. And remember to leave a podcast review on iTunes, as it helps me attract even more great guests just like David. So until next time, live life abundantly.
Thanks for listening to another episode of the School of Cashflow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.